Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I've got Greg Machinery Pete Peterson back on to talk about what's happening in the world of machinery. How you doing, Greg?
I am doing well, Casey. How about you?
Doing good, man. Doing good. We got a little bit of spring coming our way. I think we got a little cold weather coming in next week, but we'll take it while we can get it.
Spring, it's 2 steps forward, 1 step back. We're pretty nice here in Minnesota, no snow on the ground. So do need a little moisture up here. It's pretty dry though.
Yeah, we need a lot of moisture where I'm at. So it's dust is blowing, and which is not normal, but it's blowing extra heavy here of late. So need a little moisture out here. But speaking of hot and heavy, you look at the auction marketplace right now, there's plenty of stuff happening there. We've talked about this extensively on here, but if you look at where numbers are comparatively, there is continue to see some movement to more stable, more strong auction numbers over this last week than what we've seen previous week. So I guess talk about a little bit what you've been seeing out there, Greg.
Yeah, as we come to the end of March here, of course, March, particularly Saturdays in March, so many sales across U.S. in particular. Canada will catch up in April. We'll have tons of auctions up there. But yeah, it's been interesting, Casey, to track the numbers. And I think one thing we're seeing here, like you said, the kind of that solid footing, particularly on really good condition, pre-def stuff is really, really doing. We're seeing some results that are really eye-opening. So in fact, today, as we're recording this, our friends at the Steffes Group had an online farm auction. I think it was in Webster, South Dakota for Doug and Deb Becker. Really nice line of equipment. The one thing is I quickly looked at the prices. They had a 2011 John Deere 9330 four-wheel drive, did have a PTO, 6,934 hours on it for about $119,000. So right before we hopped on to record here, that seemed pretty high to me for those hours. So I went to machineryp.com, our auction prices, did the filter, and that's actually the highest auction price ever on the 9330 with over 5,500 hours, and not by a little. The previous high was 107.5.
Yeah,
which was back in 23. So again, when the right item like that shows up, and we had another one, folks maybe saw the post I did this past Saturday, was a farm estate auction in West Unity, Ohio, for David Buer, and I had a chance to go out and do a preview video with David's widow, Lynn Buer, and David's son, Nate. Auction company was A.A. Brown Auction Service, and I'm telling you, David's stuff was beautiful. He had an 01 John Deere 8210, 3,059 hours on it, about 132.5, which is the all-time highest auction price ever on an 8210. And again, not by a little. I think the previous high was 115, and actually that was all the way back on December 6th of 2011 on a farm auction in Independence, Iowa. So you're talking over 13 years. Now, it was interesting, Casey, that tractor and also David's combine on the sale. He had a 16 model S660, so the smaller models, we've talked about, they tend to hold better than the large ones. But anyway, the S660 was super nice, 1,112 SEP hours. That went for 178, a real strong price. But they were both Gold Key Tour. And when I was filming the preview video with Lynn and Nate and the good folks at A.A. Brown Auction Service, we mentioned the Gold Key Tour came up. Lynn mentioned it. And I kind of looked to the A.A. Brown folks and I said, hey, don't forget, put that at the top of the listing, Gold Key Tour. And Lynn kind of smiled and she said, Pete, I can't show you the Gold Key. And I kind of looked at her and she said, well, Pete, when we buried my husband, David, we put the Gold Key in the casket with him.
Yeah.
So in terms of you talk about commitment to taking care of your equipment, and people maybe heard me say this on AgriTalk, but the other one that got me on that preview video was talking to David's son, Nate. And I was like, Nate, tell me about your dad, David. And this was after an hour, just a little thing comes up and he goes, Pete, Dad never let me have the radio on in the cab of the tractor, the combine, the skid steer, the truck. And he said, because Dad wanted to listen to it. You listen to your combine, you listen to your tractor, you listen to your pickup, and we're not monkeying around here. And when I looked at his equipment, that's how nice it looked. So when you see 132.5 on that 8210, to me, that's a David Buer premium. You're paying for the history of that was his one owner gold key, and that David took great care of it. But again, if you analyze the whole market right now, it's interesting, Casey, because there is pressure on the lending side, particularly younger folks in ag. But there are still a lot of strong balance sheets out there across farm country. And when the right items come up, like that 93.30 today in Webster, North Dakota, or that 82.10 in West Unity, Ohio, you can see the dollars are certainly there for them.
Yeah. Looking up here on the internet here, just real quick. I think that tractor brand new costs about $76,500. Let's see here. You're gonna have to edit this, Zach. Sorry, man, but
I get asked that all the time, Casey, about what that costs new. It's really interesting to look back at that stuff. And of course, that brings up inflation, of course.
Yeah.
Time value of money, and obviously, things that's a huge piece of the puzzle. And of course, the cost of new these days. So you're buying that 8210, whatever horse that is. What's that? Is that 200, just under 200?
Like 280, 235, 220, something like that. No, that's a 410. It'd be, I think it's right around like 185, 190. Let's see.
Yeah, because I think an 8300 is like 200 or something, and then just over. Yeah. But so what's a new 190 horse tractor cost?
$300,000. I mean,
right.
I'm guessing.
That's where when I post or talk about it, that 8210 for 132.5, about 30% of people on the post will say, "Oh, that's ridiculous. That's two idiots and their money, two fools soon parted," or whatever. But it's like 70% of the people go, "No. I get why that went for 132.5. In fact, I wish I'd have known about it to bid on it, because one, it's like the nicest 8210 you're going to find, and then two, what's a new one cost?" So
yeah, yep. So this is saying adjusted for inflation, everything 76.5 would be worth $109,000 today. So that would be they got their money back. So they drove the tractor for free and got paid $20,000. Yeah.
Yeah. Well, and when you again, if you look at the picture of it, and actually A.A. Brown Auction Service sent me some video I'm hoping to post from that auction. Just some other, they had a nice 8320R, a 17 model, a little newer, 3,500 hours. I brought 183.5, a good price, but not crazy high. I think we talked about it last week, Casey. That to me, you get into that 4 to 7 year old range. Mm-hmm. That's usually, to me, what our data shows kind of where the buys are.
Yeah, typically,
so that 8320R 17 model at 183.5. Now, whoever bought that in a few years is going to have a super low hour, nice condition 10-year-old model.
Yeah.
In 35 years doing my thing, that's what everyone always seems to want. But, and again, that S660 brought 178. At an air seeder, a 14 model, a 1990 30 foot brought 67.5 for 11 years old. I thought that was okay. But again, very nice condition stuff on that sale.
Yeah. That 4 to 7 year old stuff, when you start hitting that price point that more people can afford, right? So you start looking at that, $225,000 to $100,000 something kind of falls into that mix, depending on hours and what have you. And that's typically where the majority of stuff really starts to move, especially when you're looking in down cycles like this. You see more churn in that stuff than you see typically on any other spectrum of the marketplace, for sure.
Yeah, it's interesting too. I think we've touched on in past podcasts. People go back and listen to previous episodes of Moving Iron, Casey. But it's interesting when the volume of new sales slows down.
Right.
Well, that affects things. More on the dealer level, of course. I mean, there the issues involved there, and manufacturer level too, closing down production, pinching that off, but also at the farmer level for people who were the third buyer of that initial, multi-unit buyer, combine, tractor, plant, or whatever. So when the merry-go-round slows down, everything has to adjust, and it takes a while to shake out. So I think that's 24 to me was the first, we were, especially on the tractor market, starting to kind of adjust to changing realities. And, but again, it's interesting here early in, end of Q1 of 25 to see some of these, like that 9330 today for 119 with almost 7,000 hours on it. So it is what it is.
Yeah. It's amazing to watch that stuff move because, like you talked about, the stuff slows down to where things have to pick up, and that there's that backlash that's involved in that, right? So you look at, and it's backlashes on both sides. And if you go back and look at 2008 coming out of the Great Recession and how that affected what we saw happen in 2009 to 2010, what you saw there was because the markets or the manufacturers closed down so much production, they can't just come back in tomorrow and be like, all right, cool, we're going to go back and fire things back up. It took them about 12 to 18 months to get that back to 100% production, right? And what we're seeing now, right? So if they decide, I don't anticipate seeing a large order writing period in 2025 for 26 delivery, but I do 26 into 27. So they'll start seeing that ramp up and always starts with row crop tractors, right? That's where it always starts. You'll watch it take off and run there. So we'll see this slowly increasing new production through 2028. 2027, 2028, and it's going to have a big effect on what we see in the used market space because as that new tractor order block starts to get full and those kind of things, if you're looking for a tractor and you have to do something for tax purposes or whatever your situation is, that next best choice you have is that late model low stuff, which there's plenty of that stuff out there. Or depending on where you're at in your in the cycle of machinery, that 3 to 5 year old stuff or that 6 to 10-year-old stuff, depending where you're at. But
Right.
you're going to have that opportunity to see that stuff churn. And I really think it's going to look a lot like 2009, 2010 did, where it's, people are going to laugh at me when I say this right now because there's so much stuff out there. But there comes a time when that's going to start to come back, that the number of machines out there are going to start to contract because it might feel like there's a lot out there now, but,
I think what you're talking about, it's intuitive. I think farmers get it. Anytime I get into this discussion, they're already starting to think about it. It's you can't afford not to be proactive in your thinking. So when those sales of new slow down, that's why I've sort of tentatively, carefully tiptoed out and said, 2025, if you're able to be an aggressive buyer on that good late model used, because just what you said, around the corner, whenever that's going to be, you just don't want to be as a farmer.
Right.
You don't want to be in that spot where, okay, now I want to get a new one. Oh, my dealer's on a quota; they can't get enough, and then you're just at the mercy of the market. Then when we saw what that was like in 21 and 2, and if you were buying, that was tough. I've been telling people when I've been out on the road this winter talking, Casey, I'll be like, some night when nothing good on TV, which that's like most nights, but go into our website, Machinery Pete, and go into the auction prices and go back. You can filter by time period. So go look at 2015 and punch up like your favorite couple-year-old tractor model then. Magnum 275, 290, or a 8285R or something like that. And look at what they sold for.
Yeah.
And then your head's going to kick in and go, oh my God, I remember what they sold for the last few years. And so now it's just a matter of how long is the cycle? Is it a long stretched out down period or is it a short down period?
Right.
I think you can work these down periods to your advantage if you're powder strap.
Yep. Yeah, they have I've kind of tongue in cheek said, hey, if you can buy your tractor today, buy it and then sell yours in the fall. You're gonna be way ahead of the curve if you can make that happen.
That could be prophetic. And I always try and qualify. I mean, I don't know what's 3 months from now, 6 months from now. We have a lot of things at play these days, but again, to me, it hinges on like what we were talking about before, whenever the sales of new really dry up, and then how long do they dry up, and what are the ramifications of the merry-go-round slowing down? And of course, you know, I just always boil it back to, what do farmers need? Even when times are tough and you're tightening your belt for a period like this, a year or two, or maybe it'll stretch out for another whatever. Um, Even that period from, late 13 out into like 18, there was no excitement in the market really. It was just kind of tighten your belt, hold on. But farmers need reliable equipment. And if they're not buying new, that means on the used market, they want to purchase stuff like that 9330 today
Right.
or that 8210 that sold Saturday. They want them because you got to run. You got to go.
Yep.
And the dollars, they hold together for the nicest stuff like that.
Yep, they sure do. And that's the cool. That's you've said that as long as I've known you, Greg. The nicer your stuff is, and the better story you can tell about it, the more the dollars come in on it, and that's absolutely true. I've never seen anything that looks like crap and has a horrible story sell for more than something that looks good and has a good story behind it.
Yeah, I have seen. It is interesting, Casey, and these are not just examples about the super low hour nicest ones, but I do think farmer honesty on the flip side, when something is a piece of fill in the blank, family show here, I won't say a piece of what, but at auctions, we tease our auctioneer friends. Back in the day when it was more physical auctions, I would see in-person auctions, the auctioneer give the mic to the farmer. And, farmers, for the most part, they're honest people. They even if something has an issue, they don't want to stick the next buyer with it. So when they would call it out, like, dang, I couldn't figure out the oil leak on this thing. And you would think, this thing's not going to sell for anything. It actually, the opposite would happen. The people standing there think, well, thanks for telling me, Casey, about that oil leak. Now that changes how I'm looking at this piece of equipment. And it's the opposite end of what we talked about with David with his 8210. You're buying David. And here again, even if it's got issues, well, Casey he was a straight shooter. He told me about that. So I'm willing to pay a little more because he was upfront with it. So on online auctions now, I think auction companies and even dealers, if they're selling online, really should explore that end of it too, to more call out the issues with pictures and verbiage, not buried in the, just be honest and upfront and trust that people, when they look at it, are basically, for the most part, going to go, you know what? Thanks for telling me about that. The other thing that does is in the long term of that auction company or that dealer that is upfront telling you, this thing's got some stuff going on. How does that make me as a farmer? That makes me want to deal with you going down the road.
Right.
Beyond this one item on this auction. Be like, boy, Casey with Smith Implement, he really shot me straight. I'm going to tell my friends about that. And by being straight up and honest about that, I just think that's a kind of a business 101 about being a dealer or an auctioneer. If you want to grow your business long term and grow your brand and your reputation, call a spade a spade.
Yeah. I mean, when I started in this business, the only thing you bought at auction was junk, and that was the over resounding reputation. The only reason they're selling it is there's something wrong with it. Otherwise, they would have got rid of it at a different way.
Right.
That's not true. It didn't take me long to figure that one out. But it was, you're right. I mean, the more information you have about it, the more. When I was a dealership, I wanted to make sure that the story that I was telling about the machine was a representative story of what it was, right? Because one person can wreck your entire reputation with the public. It takes 10 of those people to make people feel good about what you're doing. So it's definitely something you have to pay attention to when you're doing.
Yeah. As I get older, Casey, you're quite a ways behind me. You're chasing me, but as I get older, that what you just hit on there, that is sort of a life truth. But it's weird how a negative interaction seems to have 10 times the life of, or you get 10 positive things that come in or people say things, but it's that one negative. And that's it. You really got to, not to overdo it, but just manage that and think, how can we avoid those negatives? Or when a negative does pop up, I've, started to look for ways to actually, these are the biggest opportunities. So whether it's a dealer or auction company, and stuff happens. Then when the customer comes back to you, hey, the easy thing is to just go, well, screw it, that deal's done. But as you're able, if you at least listen fully and take care of that customer, now that you turn that negative, one of those shiny negative things, pain in the ass deals, into a 10x positive, because that guy definitely is going to go back and tell everyone, you know what, that Casey Seymour, he really took care of me. That was a bad deal, but he listened. And I just, my dad never verbalized that, but I just observing him over the years, I just it seemed to me like those bad deals are your biggest opportunities to grow your name and brand out, honestly.
Yeah. I always looked at those bad deals as, you're never going to get a bad deal to get good, right? You can always stabilize. You can triage the bleeding, to at least where it's not, you're not going to cover up a gaping wound with a Band-Aid. You got to
Right.
sew it up, make it.
Sometimes stitches are required. Yes.
That's right. That's exactly right. Okay. Yep. All right, Greg, probably a good place to stop. Glad you could be on the show again. Got any big travels coming up? Speaking anywhere this week?
No, I'm home in Rochester, happily with our 2 dogs and Mrs. Pete. At least she pretends like she's happy to have me around. So I count that as a blessing.
I know the feeling. So we're in the same book here. All right. Well, good stuff. Well, Greg, we'll catch you again next week. Appreciate you being on the podcast, and we'll see how things shape up in the auction market here after we see going on this week.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
Hello and welcome back to Moving Iron Podcast Markets. I got Shawn Hackett here from Hackett Financial to talk about what's going on in the marketplace. Shawn, how you doing?
I'm doing good, Casey. Really, really good.
Yeah, I'd say a lot of stuff going on. We've got a kind of a topsy-turvy market right now, which is, I guess, nothing new. But we've got a lot of stuff happening here. April 2nd, you're doing everything from quarterly stock reports to tariff day and all kinds of planning intentions report, all that kind of stuff. I'm sure they're going to throw in tomato crush rate for ketchup and all that kind of stuff so we can see how that stuff looks. But all kinds of crazy stuff happening on there, Shawn. As you look at what's going on right now, your thoughts and how things are progressing forward.
Well, just remember, it's the end of the quarter and the end of the month to boot, which is typically increases volatility as the markets like to move money around, especially at the end of the quarter and the end of the month. So my belief is that it appears we're pricing in all the bearish news about tariffs next week and about the reports next week from the government, which are the quarterly grain stocks, which is how much old crop stocks do we have lying around, according to the USDA. What the USDA claims the farmers told them they're intending to plant if Mother Nature allows, and then whatever else comes up along the way. But I mean, I think that's, there's just a tremendous amount of worry about all of that, and we're seeing that expressed in negative grain prices here, especially really across the board for the last 3 or 4 days. And so, most of the time, if you sell a market hard into a set of reports, it's sell the rumor and then buy the news, whatever the reports say. But I do think most of the bearish news is quickly being priced in and maybe overpriced in at this point. The market never, ever gets these numbers correct, meaning the estimates that will be thrown out there I've never seen them get it right. So somebody's wrong. And we just have to find out which way they're wrong on Monday when both those reports come out. And then, of course, with Trump, he's going to put them on, but he's flexible, whatever that means.
Yeah, I love that. Love that remark.
Well, does that mean he's doing Pilates and he's being more flexible, or I don't know what it means, but the stock market had a big, big surge yesterday because he says, yeah, there's tariffs, but they're flexible, which, don't know.
Yeah.
other than I think whatever happens on April 2nd, whatever happens, the market will be much less bearish after than going into it. Meaning, whatever it is, it's sell the rumor, buy the news, and he's going to do whatever he's going to do. And there might be more news that comes up between now and then that clarifies a little more about what is exactly going to take place. But we're just going to have to deal with the Trump factor for the foreseeable future. And as you know, Casey, the only way that I know how to handle something that you cannot predict is just to take advantage of when the markets get either overly excited or overly negative about whatever is being said. So in mid-late February, they got very, very excited and they rallied the market strong. And we had a good cash selling opportunity. Now they're getting really, really negative, and the markets have corrected substantially since then. So now I actually think, if you're an end user, ethanol producer, cattle, dairy, hogs, renewable diesel plant, whatever it is, this is a time to be looking at adding some coverage, physical coverage, putting some upside hedges on, the protective. This is the other side where now the market's gone the other way. And that's the only thing I know to do until Trump makes up his mind or until policy gets more clear is to trade this volatility. And then obviously Mother Nature overrides all things if bad or good enough to override. So meaning if the market, no matter how bullish the news is, if Mother Nature is really, really good, the market's going to go down. No matter how bearish the news is, if Mother Nature is really, really bullish, the markets are going to go up. So Mother Nature still is the great equalizer. And as you know, we think that there's a higher order risk this year for a cold, delayed planting, late spring frost season, both here in Russia, Ukraine, that if that manifests like it did last year, that will override all these things and create a worthy rally that farmers will have another opportunity to get old crop sales made and even start looking at some new crop sales. And that's kind of what we're gearing our customers to get prepared for and to take advantage of. The only thing we're saying right now is if you're in the livestock sector, if you're in the end user sector, this is a time to do something a whole lot more smart today than you had the opportunity to do in late February. So
right on. The Tonga volcano erupted in 2020, right?
22.
22. Okay, 2022.
January
So we're 3 years, we're I guess about this time ago, 3 years ago, right? About when that went off, when it February, March timeframe, something like that. When it went off.
January.
Okay. So we're 3 years past that. An incredible amount of water vapor got pushed into the air. Had a direct effect on some of the sub weather patterns that we saw in the last couple of years. Looking at that, Sean, what are you seeing on that front? Is that starting to calm down a little bit, or is it still? I know it's like an unprecedented thing, and there's no historical backing behind it. But I guess what are you seeing on that front?
We know with sulfur dioxide volcanic eruptions, those aerosols typically will impact weather for about 3 years, and then it starts to precipitate out, and then that weather effect really falls off. Everyone postulated that water vapor aerosols, which we haven't seen in one of these in a thousand years. So, like as you said, we don't have a whole lot of data. We postulated that maybe water vapor aerosols would see the same type of effect. And fortunately, there's people that are really excited about getting up and measuring water vapor in the stratosphere. We're very thankful for those people that are excited to do that because we're excited that they're excited so we can get the data that excites us. Right. And there is evidence that water vapor is starting to precipitate out. It's not fully precipitated out, but it's starting to precipitate out, which means the Tonga effect after this year should really, really start to ebb. And so this really is, I think, based upon what we're seeing, it's going to follow the sulfur dioxide track record of 3 years of an effect and then backing off. And that's the way it looks. Now in our report this week that we sent out to subscribers, everyone has, there's a lot of inquiry about the Lewitobi Laki volcanic eruption that just went off on Friday in Indonesia, southern Indonesia. And, what I've tried to lay out in that report and what I've talked about on your show before is volcanic eruptions, if they're going to have a global effect have to be a VEI 6 or higher. That's how high is the column and how much aerosols are pumped in the stratosphere. Tonga was a VEI 6, as you know, Casey, and delivered on that promise, and hence why it's created a significant multi-year global impact. We laid out an equation that one can utilize very quickly on a napkin to determine very quickly whether a volcanic eruption is, what's the strength of it. For those that want to know it, it's the column height, the sustained, not the peak, but the sustained column height plus 25 divided by 9. We back tested that equation. We didn't come up with it. I wish we did, but we didn't come up with it. But it's been back tested for over 1,000 years, and it is 95% correlated with getting the ultimate VEI number correctly. Meaning, if you have a column height of a certain amount, it typically means that enough aerosols have been deposited in the stratosphere to deliver a global impact. So, if you run this through, the sustained column height for Lower Toby was 8 kilometers. Sounds very, very big, and it is, but it's only a category VEI 3, 4. That's not going to create a global impact. It'll create a regional impact, meaning Southeast Asia, the Asia region can have a up to 6-month impact, because what happens is if you don't get it high enough in the stratosphere, it just comes right back out within 6 months' time. So what we were trying to say is that when you look at forward volcanoes, that's how you measure regional effect versus global effect. And what it means is, as you know, Casey, we've been forecasting drought for India, drought for China, and this now verified VEI 3, 4 volcanic eruption means that when you get those aerosols in the stratosphere, it's going to create a drier weather pattern, and it's going to create somewhat of a cooler weather pattern, especially for Southeast Asia. And so it's just going to take the drought pattern that was already expected to occur, and it's going to make it even drier. And it's going to take Southeast Asia, which really wasn't supposed to really be that dry, and it's going to dry it down significantly. So this just makes the situation worse for Asia regionally, but it'll have no impact or negligible impact on the US, negligible impact on South America, negligible impact on Europe. It will have at least a 6-month drought effect and cooling effect for Asia.
So when you look at countries like India and the amount of rice and wheat that they produce, is that going to affect that area with what you see there? Is that further too far east?
No, if you draw a circle, okay,
Yeah.
I have a spot of exactly where it went off. But if you look at the location of the Lower Toby, and you draw a radius, okay,
Mhm.
Of how much far a volcano typically has an outreach when it's a VEI 3, 5 kind of a thing, it does encompass India and China.
Okay.
Of course, the bullseye is Southeast Asia. So
Yeah.
it's going to take what was already going to be a very, very dry cycle in India and a very, very dry cycle in China, and it's going to make it that much drier.
Gotcha.
So Asia's going to have a lot of drought problems, and of course, India is very, very important for wheat, for rice, for sugar, for cotton, for pulse crops.
Mhm.
You know, that are extremely important for protein for many of the people in the world. Obviously, China's hugely important for wheat and corn, uh, soybeans, such forth. And so, and of course, Southeast Asia is really, really important for things like coffee, for rice, things of that nature, even bean, palm oil production. All of that is so. This just takes. While we can't predict when a volcano is going to go off, and while we can't predict what the strength will be of any volcano that goes off, what we can do once it does is quickly give you whether it's going to be a regional impact or global, and if it's a regional impact, what's going to be the impact in the region based upon what the prior weather forecast was supposed to be. If they were looking at a super wet growing season, this really wouldn't be a big deal because it would just dry down a little bit, but they'd be fine. But they were already looking for very, very dry weather. So it just makes it that much drier. And you know if you have a dry year, every half inch is important. And if you just
Right.
take another notch off, it can push you from really bad to really, really, really bad.
Right.
For a lack of a better term for that. So that just happened Friday. Fresh information, hot off the press, but definitely going to have an impact in Asia overall. And it could be a trigger for some impact to markets as we move through the spring and summer growing seasons in Asia.
Yep. Yeah. Well, plenty of stuff to pay attention to there again. If you look at where those countries are and what they're looking at, that puts the hard winter wheat and soft winter wheat in the bullseye of some possible movements there, just based around what we're seeing there. Of course, we got to have the weather patterns developed and those kind of things to make all those things come to fruition. But if all that happens, there could be a lot of movement in wheat.
I will say that the long term weather modeling just in the last couple of days is starting to show in the U.S. the first indications that they may be seeing some cold weather coming in by mid-April. It's the first time that the models have had anything but absolute blood red hot. Okay. Remember, we talked about it. We were going to have a very hot latter part of the winter into March, and we're getting blowtorch everywhere. But the models are across the board, not just the Euro, not just the GFS, not just the Canadian, but all of them are starting to show the first inklings of some colder weather coming in mid-April. If you forward that through the way the markets like to react, they like to react a couple of weeks in advance. By the time we get to late this week into early next week, and you move forward on those weather models, then your 2-week forecast is going to start to show. The market's not going to react to a 3-week forecast. It's going to react to a 2-week forecast. So we might, if these models continue to show this or intensify this, let's say a week from now, you might start to see the market starting to talk about it or start to worry about it or start to put some premium in a little bit based upon something other than blowtorch for April when we're starting to try to get the crop planted. So definitely an important inflection point in the models from nothing but red to, it might be a little blue in the horizon. And that's what you look for as a price forecaster, is when those subtle shifts come that the market isn't paying attention to yet, but might pay attention to it when you roll over the models to the 2-week forecast about a week from now.
Yeah. All right. Last question I'm going to ask you. As you look at the planting intentions report, what's your expectation for corn versus soybeans?
Well, I mean, everything that I see economically, everything that I see in terms of my talks with dealers says that the farmer, if the banker allows them to plant, are going to plant 95, 96 million acres. Whether that's what the government says or not, only the Ouija board knows. But the only reason that it wouldn't be 95, 96 is because in the fringe acres where the API yields are a little less certain, not quite as tight, the bankers may just not be willing to fund those acres. The only way you get to 95, 96, Casey, is those fringe, less quality, lower yielding acres have to get planted into corn. This dealers say that they've sold all the seed they can sell, and that the farmer doesn't appear to have a money problem, but that I would be expecting a 95, 96 million acre number. I don't know what the consensus is going to be ahead of that report. I know most people have been throwing around 94 million acres, but sure seems to me it'll be higher than that. I've been anticipating it being higher than that. That's why we turned kind of negative on the corn market here in late February, worried that the market would have a big setback heading into what should be a big acreage number. So that's my expectation. Of course, on the opposite side, soybeans will come in low. Now, how low and how high versus expectations? How much do the markets fall? All that goes into what actually happens the day of the report, right? But it's either going to be that we're going to just keep driving the corn into this report, and then it doesn't matter what the government says, it's going to go higher, or we're going to go sideways now into the report, and we have one more one more knockdown on the data report, maybe the day after the report, and then that prints your early spring low. And then those weather models go, well, it looks awfully cold. And the market goes, whoops, we're definitely not getting 96 million acres planting. That's going to be 93, 94. I think at the end of the day, when we get to the June report, which is never the same as the planting intentions report, I think we're going to plant 93, 94. And that's going to be the base of acres that we're going to go with. Take 10% off of that to get your harvested acres on corn. And then we just modulate the yield to figure out what our carryout's going to be based upon what exactly happened in the spring and what's going to happen in the growing season. And remember, part of our forecast here is that we're going to have a late cold spell, late freeze, and we're going to have an early freeze in the fall. So we're thinking May freeze, back half of September frost, shorter growing season, which means a lot of corn and a lot of soybeans, a lot of grain is not going to mature. It's not going to complete into maturity, especially in the central northern plains. It's going to get caught not finishing out. You don't finish a crop out, obviously, quality and yield suffer from that. On top of it, if you have a cold, wet, potentially even some snowfall in northern plains in October, getting the crop out is going to be slow, and it's going to create lower quality yet again. So I think you're just looking at a very challenging spring, very challenging harvest season. With, we talked about on your show before, the sudden stratigraphic warming event that is peaked, and we've talked about the correlation to a frost. But what we highlighted this week is how correlated it is to a very, very dry July.
Yeah.
Remember, there's only been 6 of these, Casey. Six.
Mm-hmm.
Since 1950. This doesn't happen very often, one like this in March. These are very rare, but they are highly correlated to extremely dry Julys. What's up in the air, in my opinion, is not whether July is going to be dry, because not only this SSW, but other indicators that we've shared suggest that. It's whether it's going to be hot or not. I'm not sure about the heat component. The North Pacific and the North Atlantic, and how those sea surface temperatures create the upper airflow pattern that impacts the maiden-Julian oscillation that we've talked about, the MJO, which is that tropical convection that rotates around the Earth and is impacted by that upper airflow pattern. We showed 2 years. So not to get too far afield, but of these 6 SSW events that happened prior to this one, 4 of them occurred at the trough of the 11-year solar cycle. 2 of them occurred at the peak of the 11-year solar cycle. You cannot use years with an SSW event that occurred at the trough if you're going to try to project the complete weather picture. It has to be similar point on the solar cycle. So 1980 and 2014 were the 2 prior years to this one that we had a very strong SSW event at the peak of the 11-year solar cycle. Both were very, very dry, but the temperatures were very, very different. 1980 was super hot. We had a terrible crop that year, just awful. Now, 2014 was substantially colder than normal and dry. Crops were a little off, but not, as you know how this works. Dry and cold, it's okay. Dry and hot, it's terrible. So that's what we're trying to determine. And the MJO phases of 1 through 3 and 5 is what creates the hot weather. 1980 we spent 90% of the time in phases 1, 2, 3, and 5. And I show a chart of that. And in 2014, we spent 95% of the time in phases 6, 7, 8, and 4, which are your cold phases. What determines that are the sea surface temperatures of the North Pacific and the North Atlantic. We're not far enough along developing those that I can make high probability conclusions on the temperature side of the equation. I do believe we will have warmer than normal temps, but that's not good enough. Like 90 isn't going to cut it. It's got to be at least 95 or higher, and preferably 100. Okay, if you're really going to knock the crop production down. So being warmer than normal, like 90s, I'm pretty sure we're going to have that. And yeah, will you get a rally out of corn because of it? Sure. But is the market going to really worry about that? No. They're going to worry about it if it's 95 or 100 or 105. And so that's what I'm going to be looking at here as we move into the latter part of April, early May, is once we get to that point on the map, you have a pretty good idea of what the variability of those regions could be and what we're looking like. So that's going to be very, very important as to whether the middle part of the growing season is unfavorable or really, really unfavorable. Obviously, a Gleisberg cycle type drought needs to be hot and dry, and the jury is still out whether we're going to get that final set of variables to deliver on. I'm very comfortable and very, very strong about a high probability dry July. You're going to have a crop that's not going to be perfect. I'm very comfortable in saying that. But to move the dial a lot, it needs to be hot. And that's what I'm not sure about right now. I don't have enough information to make that determination just quite yet.
Right on. Okay. $12 corn coming our way then. I like that, Sean.
Maybe in the end, sure.
Right on. Right on. Good stuff as usual, man. Folks want to reach out to you, get more information about Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We have a Twitter page at Faradex11. From time to time, every once in a while, we put some stuff out that goes over our work to see how we look at the markets and how we use statistics, cycles, and correlations to make price forecasts. Might be of value to those that listen and watch your program.
Right on. Sean, appreciate you being on. John and I tried to do a spaces thing my first time doing it, so I'm sure I messed something up. But next time we'll do it more things, spaces on X, where we just go into way more depth detail than what we do on here about what's going on out there. And we'll do that sporadically with some guests and stuff that come on. So Sean, look forward to doing that again, and hopefully I hit the right button and we can save that one. So we'll talk to you again next time, man.
Sounds good, Casey. Thanks.
All right. Stay tuned for more Moving Iron podcast.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Hello and welcome back to Moving Iron Podcast. Get Aaron Finnell back in here to talk about what's happening in the world of machinery. Aaron, how you doing today, bud?
Good, and yourself?
If I was any better, I couldn't stand it, Aaron.
Finer than frog hair is the
Finer than a frog hair. That's exactly right. That's exactly right. We've got some nice weather coming through the Panhandle here this week. We got basically not a lot of wind and nice temperatures. Doesn't typically get like that very often, but we've had plenty of wind up to this point, so good times.
We still have wind up on top. You just don't in the valley, I guess.
Well, I'm not saying we don't have wind. Okay, we live in the Panhandle, Nebraska. We have wind all the time.
We're under 60 now.
You can't. It's not a good day to fly a kite. Let's put it that way. That's like it's been in the past.
Right.
Now there's been we're in that transitionary period right now going into the equipment marketplace, right? So you've gone from your first quarter buying habits, first quarter buying habits to this pre-planting period where we're at now. We are March 25th right now. Planters out here will be rolling in about 30 days, kind of get things getting going. Sugar beets probably start a little earlier than that, but we'll start rolling for the most part. But by this time, the major purchases have been made. If they're making a purchase now, for the most part, it's probably something that happened unexpectedly, and you're kind of looking at some things, or you're just waiting on a piece to show up, something like that. But for the most part, you're in that transitionary period where you've gotten what you're going to get, and now you're getting into the shop, getting things tuned up, getting things ready to go. So moving things forward there.
Typically you're spot on. The number of last minute purchases this year, and it makes sense if you think about it. The price point of late model machinery, the interest rates.
See, Aaron, we call this a segue, and that's what we're doing here. We're segueing into the point I was getting to. So go ahead.
I just jumped it. That's it. That's it. They just stole your thunder. Typically, yeah, you're right. To immediately segue in, just jam it in like a wedge. But yeah, given the price of late model machinery and where interest rates are, there's been a substantial amount of last minute big ticket items. What I call it is last minute. It's March.
Yeah. It's March.
So it's been what I would, high horsepower tractors, planters in March, like you typically never see. January became March.
Right.
Especially, go ahead.
No, go.
I was going to say, I think that's just the price of the iron and the interest rates.
Yep. And this is even in other downturns, we haven't seen the movement of equipment like we've seen this right now. Like
right.
I'm talking like upticks, right? So, like we've talked about here a million times, that ag equipment has about a year lag, right? So you see the good stuff coming, the bad stuff coming for about a year. We're starting to see some good stuff come our way. But again, it's been a kind of a hurry up and wait scenario for the most part across the entire spectrum. And here we are now. They're like, got to make that decision. If you look at the number of planters that are on the marketplace, how many of those have fallen off? If like you talked about row crop tractors, those kind of things, how much they've fallen off. Even combines to some extent, you're seeing a lot of combine movement more than I expected. And the one that shocks me to death, I look at it and shake my head. I mean, I know it's seasonally that time of the year for it, but the strength of the sprayer market is another one that I keep coming back to as watching the stuff sell on auction, those kind of things. The last few that I've watched, there's been some high dollar stuff sell that I just would have never anticipated seeing those prices. Well, what's your feel in the sprayer market? It just doesn't feel. Typically, the sprayer market isn't hot, right? It's not. You don't get a super smoking hot sprayer market. That is, sprayer market just kind of shows itself in that fourth quarter, first quarter of the year, maybe late third quarter going into fourth quarter. But for the most part, most of the sprayer sales you see are postseason and preseason. Very rarely do you see anything for about a 6-month period after about February, it feels like. So what are your thoughts?
Yeah. Right. I'd completely agree with that. As far as timing, the market, my experience has been kind of backwards of that. Not a lot of activity to speak of. Ironically enough, the most activity on pull types. Interest in pull type sprayers like I haven't seen in 25 years. Not sure why. So there's a portion of that. But in what I would call the high end self-propelled on the Deere side, if it has a letter in the model number, it's what I'm experiencing is if you get interest in it, I will say this, if you get interest in it, it is rock hard, carved in stone. Something's happening now.
Yep.
But they're just not, because that is the scenario. The flip side of that is there's not daily discussion, if you will.
Yeah.
Whereas combines, choppers, tractors are a daily thing. The sprayers actually concern me as much as anything else.
Yep. And I think there's still plenty of sprayers out in the marketplace if you look out there. And it's not like they're trending up or trending down. They're just kind of flat month over month as far as what that looks like. But what I'm talking about is the strength of the numbers coming out of the auction market. That's what gets me a little bit. It's just, where's this? Because like you just said, like you talk to any dealer and they'll tell you just exactly what you just said. Right. But then you go watch an auction and they're like, you got a Fendt sprayer sell for over $500,000, barely over $500,000, but still went over $500,000.
Right. But that's not the best example either, because you don't have 100 auction results of those even.
No, but I was saying, like, what surprised me about that deal was that it was that low hour of a Fendt sprayer that went. I watched that thing. I'm thinking 375 to 4.25. That's what I was thinking when I think so.
Right.
And then it hit over $500,000. And I'm just like, how many $500,000 sprayers are sitting out there on someone's lot?
A lot.
Okay. And then, so now we watch it, but you watch the stuff, and that's where I'm just, my, even some stuff like you take the $150,000, $200,000, $300,000 sprayers,
Right.
they're selling strong at the market.
Yes. Yeah.
But there again, you go back to the dealership marketplace and you look at what's sitting on the lot. And
Right.
just like what you just said, I don't see it. And then that's just weird, right, for me when you have that much of a dichotomy between the two worlds. You know what I mean?
Right. Right. The big, sprayers have always been that kind of that entry level into precision for guys.
It is right.
That first machine. So I think that being the case, that is what's pushing your auction buyers. If I had to say, it's not ours or anything other than straight up tech.
Yeah.
I think the tech of getting what's current is got to be what's pushing those, because that was, where did precision ag first show its face? In a light bar.
That's
Where
right.
did they use light bars? Sprayers, first and foremost. Yeah. So they're the little brass ring of precision ag, so
yeah, that too, if you look at where the versatility of a sprayer compared to where it was 10 years ago, on your ability to do some high crop applications with the same machine. We used to have, like, that was Hagee's like kind of niche in the marketplace, right? The high crop application. Well, now you've got machines out there that are, you can go from your standard height all the way up to a high crop all on the same machine, and you just adjust your height as you need to based around what you're looking at. You look at the gallons that are associated with the machines now, the technology with the amount of different chemicals you can spray within the same system, and do two different applications at the same time. I mean, like, there's so much stuff that you can do now with those that it's a little bit.
You can switch nozzles without moving.
Yeah, I know. It's crazy. Like 5 nozzle body, head nozzles, and you flip around to whichever one you want. So it's like that garden hose out there. It's got like jet spray.
Yeah, the old twister knob.
The old twister knob on it. Yeah, but you're right. I mean, when you look at how the evolution of a sprayer has come around, it's from a technology standpoint. Because next to putting the seed in the ground, that's the most expensive part of your farming operation is the subsequent burn downs and those kind of things, and top dressing and so on. So like all that stuff matters when you start looking about how much dollars are associated with that. So.
Well, and not only that, Casey, but you think about the last 50 years, 30 years ago, pull types really got hot.
Yep.
Because guys were paying co-op $4 an acre, and I'm done. Mm-hmm. We'll do it ourselves till it gets too tall. Okay. All of those guys go self-propelled. The self-propelleds come in, it just keeps going. And the sprayer is one of the biggest things. If you let's put sprayers and combines together real quick. Guys have had a combine on the farm since 1950, 1960. Okay. There are still lots of farms across the country getting their first self-propelled sprayer. Lots and lots.
Yeah.
Sell them every day that way. That's the other thing pushing that hunt for the tech in that auction thing.
Yeah.
I just wanted to hit on that quick too, as that popped into my head. So
yeah.
It's still the first one on the farm.
Yeah.
It's the only thing that exists in the tech realm that's that way.
Yeah.
There's guys that have full precision planter, don't own a sprayer.
Right.
So
that's one thing too about even on the pull type side of it, the amount of technology you can put on a pull type boom.
Yeah.
It looks like,
you really can.
NORAX systems and all those kind of things. And you can put auto header height control or auto boom height controls and those kind of things, raw machine.
Yep.
And, you start looking at those kind of things, technology there. So you can get away with some stuff that you wouldn't normally get away. But there again, you're limited to this on the height of your
crop height.
I mean, even on like the tractor and all that stuff, unless you get like a an orchard tractor or something
There
crazy
you
like
go.
that, you know.
High crop.
High crop tractor out there.
6155H.
Yeah, that's right. Yeah, and get that out there. But I mean, you're right. I never thought of it like that, but that's that introduction to the precision side of farming in a lot of ways.
It's the machine where guys are seem the least fearful to adopt new.
Right.
Does that make sense?
Yeah.
I don't remember ever hearing, when did ExactEmerge come out? 15?
Yeah.
Right in there.
Mhm.
It was, can't wait to have it.
Yeah.
It was never, that ain't gonna work. That, it was boom, let's do it.
Yeah.
You change something on a tractor and what?
Yeah.
Where I put my pop can. You can't do that.
Yeah. Yeah.
Planter would be the tweener. Here in recent years, planter has been the throw wires at it, tech. Kind of took the place of the sprayer for 5 years or so here, but sprayers are coming back, and a big portion of that is the amount of upgradability they contain too. So
yeah. Now maybe that's some of the rush to the upgrading what we're seeing out there, but needless to say, they're going to have plenty of opportunities to buy sprayers, because there's last time I looked, there's something like 6,000 sprayers on the market or something like that. So there's plenty of them out there to be had, and most of those are that 1 to 3 year old machine that we saw come out of COVID, right? Because if there's any machine that I think had a hard time getting through the factory line, that was 100% sprayer. I mean, it was the most delayed machine out there.
Yep.
Most of the time.
Definitely.
So when you're looking at, I had a fun conversation with a guy the other day, and we were looking at, like loader tractors, that 125 to 175 horsepower tractor. And you would think that those would be flying off the shelf faster, just because of where cattle prices are, but they're not. It's actually one of the most stagnant things on the marketplace.
I'm gonna go ahead and crown it. I'm gonna crown it. And if you want to put an exact number on it, it's 155.
Yeah. Yeah.
You know why?
It's the state mowing tractor.
That's exactly right.
Yeah. And that's the thing that drives that marketplace that people forget about. And we've talked about that several times on this podcast, but those state mowing tractor returns, lease returns that come off of those state tractors, every state has some manufacturer that they work with that gives, and they get, whatever it is, there's thousands of those that go through those state mowing contracts. And they're anything from without loaders, with loaders.
I think the way those contracts work, you have the ability to spec it how you want it back.
Right. Yeah.
So ours are well equipped, but straight axle gear shift.
Right.
Typically around here, because that's exactly what the rancher wants.
Yes. And but you look at where, even when they have all the stuff considered, even when they have looked at
TLS and IVT and
they have all those things that are in there. What I find is the secondary market's looking for those kind of things. The ILS front ends and the ILS, ILS front end, TLS front ends, those kind of things. Those constant velocity transmissions and those kind of infinite velocity transmissions, those kind of things. But nobody wants to buy them that way from the factory, right? They like the idea of it in the secondary marketplace. When you look at this right now, you have had so many of those machines come to the marketplace, and to be really honest with you, just like the ranchers are looking at this the same way everybody else is looking at, even though they're, for all intents and purposes, they've had almost 3 years worth of a pretty good run here. You go look at any survey out there, any survey that you go across, and Andrew McCrae interviewed me yesterday for his Farming the Countryside show, and we were talking about this thing. And I was like, equipment's like the 5th or 6th thing on the list of things you get updated when you start looking at where the money goes. You look at I've looked at 3 different.
Which kind of operation?
In general.
No.
I've
It's
looked
not
at
that low. It is not that low on a crop farm.
that's especially where it's the lowest at of any survey I've looked at.
Really?
Yeah,
I
it's
find
been
that flabbergasting.
there because everyone's looking at, okay, what do I need to make sure I can plant my crop next year,
Right.
right? And then whatever's left, we'll go shopping for equipment.
Okay. Yeah. Well, from that standpoint, yeah, it's
Yeah.
inputs first. That's not a fair comparison.
Well, I'm talking about dollars spent on the farm.
Well, you have inputs are always got to be first, or there's no farm.
Well, I understand that, but I'm talking.
I thought you meant like
No.
house, grain system, wife's car, pickup,
Well, I'm
farm
talking
equipment.
not like. So what the stuff that I read were not completely buying all of your fertilizer for the year, or not completely buying all your seed, but buying a good chunk of it up front,
Right. Prepaying.
prepaying for some of that stuff for tax benefits and what have you. But the other side of that too is if you look, I mean, unless you didn't do anything during the last 3 years, a lot of that equipment out there doesn't need to be. It's not like it's all the wheels on the bus are falling off when you're looking at the amount of
Oh,
equipment
no.
on the farm. You know what I mean?
Well, a substantial amount of it's new.
That's right. Now, survey wise, you can look at it and you still have the argument that this is the oldest fleet on the marketplace that we've seen in a long time. But there has been a significant amount of equipment that's been put on the place. So I'm thinking of this the same way on that cattle side when you start looking at hay production side of where this 150 to 175, maybe down to 125, but maybe that 150 to 175, 180 horsepower tractor. They're just going into this first cutting of alfalfa, you start seeing all of a sudden, all right, let's go get that loader tractor we need now. It's like they've been waiting and waiting and waiting to see what happens, and then here we are. And it's just amazing to see something where, if you had 650 corn, row crop tractors would be flying off the shelf, right?
Yeah.
It'd be going fast. Combines would be going off the shelf. People would just be updated, but you don't see it over there. And I just find it very, very unique right now that that's not happening.
Well, you got to keep in mind the rancher is a far more conservative.
Sure. 100%.
That's the world where this is how we've always done it. Isn't
Yeah.
changing tomorrow like
Right.
it did on the farm 20
Right.
years ago. So you've also been in business long enough to know that they're fairly creative with wire and such too. So
That's right. That's right.
that's the world I grew up in, man.
Yeah.
I'm not throwing rocks at anybody, but they're going to make sure they're there 20 years from now versus a cab with windows.
Right.
That's the mindset. Now that also they have accountants too,
Right.
and they have year ends too.
Right.
So that they do come to town when it's time. But the other thing of it is maybe dealer personnel, they've been so chasing that $7 corn for 2 years, then trying to figure out how do we get out from under this for 2 years. Now it's time to go back to normal process and call on everybody.
Mm-hmm.
And see what happens.
Yeah, that's probably true, right? Because
too much order writing.
Right. Yeah, there could be
my favorite term.
Yeah, there could be the focus on the combine, the focus on the $600,000 used tractor type of thing. The $600,000 combines, those kind of things. Probably take if you're looking at it, take a preference over the $150,000 loader tractor.
But that's just it. So many of them aren't 150 anymore.
I know,
which is also part of the problem. Why those guys are still at $100,000 is what God's plenty for a loader tractor,
right?
And a lot of those, your loaded up Deeres, Cases, New Hollands off of mowing contracts are not.
Yeah,
they are way higher.
Yep.
So
yep,
there's a lot of factors in there, but you're right. Of anybody on the equipment side, that's the biggest why aren't those moving?
Yeah, exactly.
Those are the only people that have money.
Right. And that's what you think they'd be. So, okay. All right. Good place to stop there. And folks can reach out to you, get more information on what you're doing. What's the best place to do that?
Probably the best way is either check me out on Twitter at Aaron Fintel. Call me or text me 308-760-1193, or you can shoot me an email, afintel@21equip.com.
Right on. Aaron, appreciate you being on. We'll catch you again next time.
Sounds great, my man.
That'll do it for this edition of Moving Iron Podcast. Special thanks to John Deere for being the sponsor for this edition. If you want to see more Moving Iron podcasts, go to Farm Journal TV, and you can see everything there. You can also see all of Greg Peterson's Machinery Pete TV there as well. So with that, I'm Casey Seymour with Aaron Fennell, Sean Hackett, and Greg Machinery Pete Peterson. Let's go some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.